Food flux. Amid the cooler headline inflation, food price pressure pose a risk. In October, India's consumer price inflation eased to 4-month low of 4.87, while wholesale price declined year on year for the 7th successive month by minor 0.5%, although only marginally lower than the 5% retail inflation in September. October's price rise pace, which is exactly the same as that in June, surely represents some relief for the third successive month from July's 15-month high pace of over 7.4%. Rural consumers still face a high inflation of 5.1% though. Core inflation, which excludes energy and food costs, has eased further, and household service inflation dropped below 4% after several months above. The rise in price of vegetables, which has surged over 37% in July, eased to 2.7% in October. However, the overall uptick in food costs for households stayed firm at 6.6%, virtually unchanged from September, as the other essential edibles show faster price hike or remain at elevated level. Some of these, like pulses up 18.8% and cereals 10.7%, may be attributed to worries about Kharif output and uncertain Rabi prospect, as well as hike in minimum support prices for crops. Pulses prices were up 19.4% at the wholesale level, signaling that more pass through the retail price is likely. Monetary Policy Committee of RBI, Reserve Bank of India, which meets early December for the next review, will not be too swayed by the October tiding. As per the 5.6% average inflation projection for this quarter, down from 6.4% in the previous quarter, November and December, may well see an average inflation of 5.95%, fractionally short of the central bank's upper tolerance threshold. Excluding edible oils, whose 3.7 year-on-year drop in price played a key role in moderating the consumer price index, would have meant a 5.6% rise in prices. Base effect from the last year, when the Ukraine conflict had spiked edible oils price, will start to dissipate in coming months. Similarly, while the 6.8% inflation record in October 2020 helped cool price rise last month, those base effect will surely ebb this month. Retail inflation has eased to 5.8% last November, with the food price index rising just 4.7% from 7% in the previous month. The perceived retreat of inflation last month thus may only be fleeting. Households that seem to have adjusted to the continuous recent rise in living costs by pulling on discretionary spends and downsizing essential consumption as per industrial output trends, are likely to remain cautious rather than loosen their purse strips anytime soon. For an economy whose resilience relies on its domestic demand buffer against global shocks, reluctant or budget-cramped consumers are the biggest headwind for policymakers to strive to address.